Hi everyone, welcome back to my channel. If you are dreaming of buying a home in Ireland and your thought of saving up a 10% deposit feels impossible, this video is for you. In this video today, I'm going to break down how you can save up 10% mortgage deposit within just a year without necessarily have to save for 5 years, for 10 years, or for your entire life. So come with me and let's dive in. Now let's start with what 10% deposit looks like in Ireland. For first-time buyers in Ireland, you generally need 10% of the total purchase price of the property. If you aim to purchase a house worth 450,000 euros, it's 10% of the 450k is 45,000 euros. Now here is the game. If you are buying a new build in Ireland and you have been working and paying your taxes within the last 4 years, so you can generally claim up to 30,000 euros back from government help to buy scheme, provided you have contributed up to that amount as part of your tax payment within the last 4 years. If you are able to claim up to 30,000 euros from help to buy, this means you only need 15,000 euros to go. But let's say if you haven't contributed up to 30,000 euros as a tax payment in the last 4 years, so let's say you were able to claim only 20,000 euros back from government help to buy scheme, this means you will need to save up the 25,000 euros, right? Plus the 20,000 euros you are claiming back from help to buy, that would give you the required 10% of 45,000 euros. Let's assume that you have contributed up to 30,000 euros as part of your income tax payment within the last 4 years. So you will be able to claim this amount, which means you will only need to add 15,000 euros from your own savings to complete the required 10% deposit for your mortgage. But remember, you will also need money for solicitors' fees. This is typically within 2,500 euros. You need money for valuation fees. This is usually around 200 euros. You need survey cost. That's generally not required for a new build, so let's take that off the list. So you also need to allocate some small buffer for unexpected, let's say 1,500 euros for that. So altogether, let's aim for saving target of 19 to 20,000 euros. Let's say 20,000 euros. So in this case, you are going to save 20,000 euros. And you plan to save that, let's say, within a year or a year and a half. Now, how do you save up these 20,000 euros within a short period of time? Step 1, know your savings number. For example, if you want to save in 2 years, if you want to save 20,000 euros, you need to save 835,000 euros a month. If you want to achieve these savings in 18 months, that is 1.5 years, so you need to save about 1,115 euros every month. Now, if you want to save this amount in 12 months, that is just 1 year, then you need to save up about 1,670 euros per month. This is my favorite. 1 year, this is called a smart saving, and it's a very rigorous but it looks massive, but this is achievable. I understand that, this number sounds huge. Stay with me in this video, because once we set up the right structure and cut the right cost, you will realize that you have room you didn't know you had in your finances. Step number 2, use the 3-bucket strategy. Bucket 1, fixed living costs. These are rent, utility, food, and transport. These are your non-negotiable fixed costs. The bucket number 2, flexible spending. Eating out, entertainment, holidays, subscriptions, for example, to Amazon Prime, Netflix, anything you have been subscribing for that's been taking, monthly subscription fee from your bank account. And for my African audiences, your black tax. You know what black tax is? You can have a look at that. So these are flexible spending. You can save a lot of money by cutting that flexible spending. Then the bucket number 3, it's savings first, not last. Set a monthly deposit goal and treat it like a bill. I say that again. Set a monthly deposit and treat it like a bill. The key is very simple. Pay yourself first once your salary comes in. How do you do that? You need to set up a savings account and ensure that this savings leaves your current account directly into your savings account the moment you get paid. If the money is not in your everyday account, you have less access to the money, and this reduces the temptation for spending it. Make sure this savings is the first money that leaves your account once you get your salary. Don't leave it for last. Treat it like an important bill that has to be paid every month. Step number 3, open a high interest or government-backed savings option. In Ireland, these are your best option for growing your deposits faster. For example, you can do this with your local credit unions or savers accounts. Some of those credit unions offers a competitive rate and flexible access to your fund in the case of emergency. Another option there is that on-post savings. These are very safe and they are government-backed savings. It's very simple. You can also, have a look at what you have there. And of course, there are other high interest digital banks like Revolut Bank or M26. These banks are often offer higher interest rates than the conventional banks in Ireland. Step number 4, reduce your top 3 biggest costs. I say that again. Reduce your top 3 biggest costs. Most people try to save by cutting coffee, but I tell you, this is not a problem. Drinking the coffee can never be a problem from not able to save up a 10% mortgage. But the big wins are in your big expenses. What are your big expenses? Number 1 is the housing. For example, how do you save costs from these big expenses? You can, for example, move with family temporarily while you're doing this rigorous savings. That is if possible, if you have a family member whom you can move with, to allow for the savings. Or you can also consider house shared instead of renting solo. So by sharing, then you can share the rent cost as well. Or if you are living in a very high rent areas like in Dublin, for example, and you have the opportunity to work remotely, then you can move to outside of Ireland or of Dublin or to wherever the rents are cheaper. And then with this you can rent cheaper even if that place is far away from your work. Since you can work remotely, then consider working remotely for this period to allow for the savings of this, this amount or your monthly obligate contribution. Cutting rent by just the 500 euros a month can give you 6,000 euro savings in a year. What if you are able to cut even more than 500 euros a month in your rent? Then you can easily achieve, a lot of saving from this. That is housing, one of your biggest, expenses. Another big area where you can cut cost is by downsizing. For example, you can downsize your lifestyle a little bit. If you have a car, if you're driving a very expensive car, you can downsize your car, and you can cash up to 5,000 euros a lump sum from downsizing your car. For example, if you are driving a big car, a Jeep, you can sell this car and then buying a cheaper one and take the money, towards your deposit. And then you still have a car, but the only thing this time is your car is a little bit, it's smaller than what you used to drive. And once you buy your property, you can go back to your former car. By downsizing also, you can drop any unnecessary insurance extras. If you, for example, have 2 cars in your family, yourself and your spouse, and you only one of the car is mostly used, you're not using the other one, and you've been paying insurance, road tax, and a lot of bills on this car, you can sell this car temporarily, and once you get your home, you can buy it back. By doing this, you can also save a lot of money. Another area where you can save cost is food. Stop eating out. Again, this is temporarily. And then if you enjoy going for holidays, you can also maybe consider, reducing that for this period when you was doing the savings. And then shop. When you're going for shopping, try to shop with list. By listing everything needed in the shop, and once you get to the shop, you make sure you stick to your budget, you stick to whatever has been listed in your shopping list. Don't buy 2, get third one free. Stick to your budget and buy what you need, not what you want. You can also save, a lot of money by switching from whatever where you are shopping to shops like Lidl, Aldi for staples. And then with this, you can save a lot of money. You can save 150 to 250 euros a month without feeling any deprived. Step number 5, build income. Don't just cut cost. You can only cut so much, but there's no limit to how much you can actually earn. So the practical ways to increase your income, for example, you can ask for a pay rise with a structured case. You have to just be able to justify why you think that your pay should be increased. You can take up overtime or weekend shift if you have the opportunity or the capacity. You can start side hustles like tutoring, freelance services, pet sitting, delivery apps, and so on and so forth. You can also sell any unused items in your house on advert.ie or Done Deal or Facebook Marketplace. You can also turn your hobby into income. For example, photography, hair braiding, baking, and so on and so forth. With all this, you can earn, extra 500 to 700 euros a month. And this will go a long way to achieve your savings deposit. Step number 6, track your progress monthly. When you see the number growing, you know that you are doing the right thing, and this will also encourage you to stay motivated. Please note that banks want 6 months of clean spending patterns, so ensure that you prepare for the scrutiny. Another common mistake people make is relying on only cutting small costs, but not focusing on the bigger costs are the problem. While the small costs are also contributing to your inability to save monies, the bigger costs play the major roles. Now, saving a 10% deposit in Ireland feels overwhelming, but with the right strategy, you absolutely can do this, and you can do it within 1 year. Break the goals into monthly numbers. Cut the biggest expenses. Boost your income. Use every government schemes available towards the purchase of your first home, and track your progress. If you find this video helpful, hit the like button and subscribe to my channel. Also remember to share this video with anyone who is trying to buy a home in Ireland. Not only in Ireland, this is a very pragmatic approach that can be used for save up towards your home in anywhere in the world. And also, let me know in the comment section what part of savings deposits is the hardest for you right now. Thank you very much for watching this video, and see you in my next video. Bye.